Well, the world's largest online retailer released its second quarter results on Thursday. Amazon reports a boost in profits, but did not manage to match all of Wall Street's expectations. Okay, to continue with all things Amazon, let's bring in Anthony Chan. Anthony's former chief economist at J.P. Morgan Chase. Anthony, great to see you again. Okay,
Good to see you, Sean.
A mixed bag to a degree on Amazon's earnings. Quarterly profits up, but a miss on revenue. And investors punishing the stock a bit in after-hours trading. Last time I looked, it was down about 6%. Your take on all of this?
Well, I think you're right, Sean. The reason that the investors were disappointed was not because of the earnings. They certainly beat on those. But we know that when it comes to stock prices, it's always what is expected in the future. And when you looked at the revenues or the sales for the next quarter, they kind of fell short there. And so people are looking at that and thinking, should we continue to pay such high prices for these earnings that may disappoint in the future, certainly those revenues? The good news, Sean, was that AWS, which is really the shining star in this company, continues to do very, very well. And that's great news. But remember, Sean, that comes at a price. They're spending a lot of money on capital expenditures. They've already spent over $30 billion in the first 2 quarters of this year, or the first 6 months of this year. And guess what? In this quarter, they actually spent more than the prior quarter. So that caused a little nervousness.
Okay, let's talk a bit more about that cloud service. Now, I guess so far this year, last time I looked as well, its stock is up about 20% so far. And as you talked about, Amazon Web Services, AWS, up 18.7% this year. Now, AWS is going to be extremely important to the company moving forward. You talked about the expenditures, but talk just a bit more about that entity and why it is so important.
Well, it's important because the big rage and the big excitement is artificial intelligence and technology, and that is really the wave of the future, the way the world is going to make money. Because you saw from Amazon that when it comes to selling products, they basically fall a little bit short. They're already looking at a consumer that's a little bit more cautious. You mentioned in your headline that initial unemployment claims have risen to a yearly high. So you can't really put your eggs or your expectations on the other components. You got to focus on AWS. That did come in a little bit stronger, but again, the big question is, will it continue to do that over the next year or over the next 2 years? That's the question mark when the shareholders look at those revenue expectations.
Yeah, one thing we've been hearing is the difficulty in monetizing anything with AI, at least at this point, aside from a handful of things. Now, for a company, Amazon has undergone a lot of cost cutting. You talked about the unemployment numbers. Noticeably, it shed 27,000 jobs post-pandemic. Do you think that is over? Is it kind of set moving forward?
Well, I think that they're going to have to continue to control those costs. And the reason I say that is because we are getting indications from a lot of the other earnings reports that companies are having a little trouble with pricing power. So the only way to grow profits is basically to control costs. And that's not just true for Amazon. It's true for many other companies. You saw Intel today basically reporting layoffs and things like that. So yeah, cutting costs is the wave of the future.
Now, Amazon's also jumping into the big discount shopping section. It's going to be shipping items directly from China, taking on a couple of the more established players in the game. What does that bring to the table for Amazon?
What it brings to the table is another opportunity because Shein and, of course, Temu are really making inroads into the United States, and they can't let that market disappear. So what they're going to do is try to bring those products directly using the same kind of framework that those two major companies use. The drawback is that they won't be able to give you those products as quickly as they do with Amazon Prime.
Right.
The deliveries will be 9 to 11 days. And so the big risk for Amazon is, do people start thinking of Amazon as a company that can't deliver products as quickly as they could before? Do they view that as a setback? That's something that Amazon has to deal with. And hopefully the way they market that new discount opportunity or discount outlet is going to be crucial.
Yeah, it's going to be interesting to see. Okay, you talked about the expenditures, the amount of money that the company has been spending. And Amazon, there's no other way to slice this, is sinking a small fortune to start carrying NBA games on Amazon Prime, much to the heartbreak of a lot of people who followed TNT over the years. Now, a couple of things. 30% of the people who watch the NBA are under 30 years old. So that's a lot of young eyeballs. And secondly, I guess we should all brace for the inevitable jump in the cost that we pay for Amazon Prime now.
Oh, there's no question. But guess what? They are actually going to be offering a product that we all want. When they have opportunities to expand their NBA rights, exclusive coverage of NBA Cup games and play-in tournament and the first-round playoff games, when they have opportunities to show things like that, I don't want to say it's priceless, but it's certainly something that consumers want, and they're in it. And this is not just a short-term thing. They're certainly moving in that direction and thinking long-term, and that's going to be very positive for Amazon. I'm excited.
Yeah, it's like having a store on Fifth Avenue. It really puts them on the table. And they did really well with the NFL as well, so let's see how they do with the NBA. Anthony, always a pleasure. We enjoy having you on.
My pleasure. Have a good one.
You too.